Hey everyone, it's Steve here from SafeBridge Mortgages. I just wanted to record this video for everyone because I know there's been a lot of chatter and a lot of headlines going around the media right now about rising interest rates. So I just wanted to speak to that for a couple minutes rather than type out a long-winded email. So as expected last week, the Bank of Canada held their prime rate, but they also indicated they expect to start raising rates earlier than anticipated. So we're looking April to June of 2022. So that's ahead of their initial timeline. They gave us a few months back. They said we don't expect to do anything until 2023, but because of rising inflation, they've decided to accelerate that timeline. So what does this mean? Should we be panicking? No. Short answer is no. Should we be planning? Yes. And how can we do that? Well, if we know that rates are going to be rising, so for those of you who are in variable rates, let's start looking ahead and start potentially increasing your payments now so you're already used to making a higher payment when prime does increase. And then in the meantime, you've been paying the mortgage down a little bit quicker. The other headlines we've been seeing is with respect to how high and how fast rates might go. We have an economist from Scotiabank saying that to expect 8 rate increases, and I think that that statement is very misleading and is not necessarily based in reality. I don't think our economy can sustain 8 rate increases. I mean, plus the government borrowed billions and billions over COVID, so they need to pay that back too. So, the more we raise rates, the higher the interest costs will be on the government to pay back their loans as well. So I don't necessarily think there's going to be 8 rises, and especially our economy is still not recovered. We had some GDP data come out last week that what didn't paint as rosy a picture as people would have hoped for. So our economy still hasn't fully recovered. So I expect we're going to see a few rate increases next year. And then I think it's going to be a wait and see approach on how that impacts the economy going forward. And let's not also forget that things can easily change. We're heading into the winter, if variants rise up again or there's more issues and we have more restrictions, then this can also change the time frame. So they've changed the time frame once. It's not to say they can't do it again. And also typically speaking, when rates go up, there's also the possibility they can come back down at a later point too. So it's not necessarily just a hockey stick where rates just shoot right up. So anyway, if anyone has any specific questions with respect to their own mortgage, I'm more than happy to help answer some of those questions. Oh, and before I forget, even people in fixed rate mortgages right now, they should also start planning for the future. So you can also start making extra payments on your mortgage because you can expect when your mortgage is renewing in, 1, 2, 3, 4 years, the rate should be higher than what you're currently paying. So plan for that, start making extra payments if you can afford that in your budget. Okay, and yeah, one last thing, I also want to congratulate my client Mercedes for winning that Amazon gift card. So again, congrats Mercedes. And yeah, I hope everyone enjoyed this video, and if you had any other questions, feel free to reach out directly to me, okay? Thanks for watching everyone, have a great day, bye.